Yeah, Friday. What's up, everybody? Friday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great trading day yesterday as we are doing our best to take a look at what's going on heading into the weekend. Real quick reminder, tomorrow morning at 8 a.m. Central, we're going to be doing a live trade review. So simply go to tradersarmy.com/live online to join us for our trade review tomorrow morning, 8 a.m. Central. Tradersarmy.com/live online. Looking forward to having you there. All right, let's go ahead and dive in. We are down this morning about 2% in the S&P, taking it on the proverbial chin, if you will, after Amazon and Apple earnings came out and caused a gap down in the markets. Now, we did have a bit of a demand area here. We were looking for a potential reversal. Now that level, if we go down and look at that level, obviously that level doesn't show up on the hourly chart. So on the 15-minute level, what we were looking at was this little wick over wick area, and that's a fairly clean wick over wick zone. Price came into the level, and then it just did nothing, right? 1, 2, 3, 4, 5, 6 candles later, price had kind of made a move, but really came back into it. You had plenty of opportunity to say, you know what, I don't feel like this is going to make the move. But what did this set up for? Well, for those of you that are regular listeners, this set up for a beautiful breakdown. And hopefully you were able to catch this breakdown. Now, I did not anticipate that breakdown to include a gap down, but it did include a gap down as price has moved down very nicely from that level. If you missed that trade, I think that you might have a secondary bite at the apple for a short at this another 15-minute wick over wick level right here. Now, we did come close to that area once, so you have to come back in and re-look at that since we've come close to it once. But I think that level works out pretty well. Now, I will say, for those of you that took the gap and go trade, because there was a gap and go setup last night, we actually didn't have an entry into that gap and go until very late in the overnight, because remember, the way a gap and go trades is that you can't get short until you get lower than the first candle's low, and that didn't happen until this 1 a.m. Central candle was formed. Now, we have rallied up from that level, but I will say that we're rallying up into an area where I think we could see a bit of a reversal. So to me, this looks like a candle-to-candle opportunity for those of you that trade that candle-to-candle style, and we've put in a little bit of a topping pattern here. So if you are so inclined, I maybe can get this out fairly quickly to take a breakdown below this area here, or just go candle to candle on the hourly chart. I think we definitely have more of a bearish sentiment for the day. Looking at our 4-hour trend direction tells us that we have I've got maybe a lower low right through here. I don't technically have a lower high as of yet, so that supply level might actually hold to be a slightly lower high. All right, next, let's look at the NASDAQ. Same picture in the NASDAQ. We had our 15-minute level. We actually got a little bit bigger of a move off the 15-minute level in the NASDAQ than we did in the S&P. Moved up for about a 2-to-1, but your 6-candle rule probably took you out of that trade before then, as it came back to that break-even point a couple of times. And then we saw just kind of those pretty big candles here. And my guess is that those larger candles that we saw were probably a little bit of a pre-warning to the earnings announcement, as that earnings announcement came out, and we saw a pretty big move from that level. We've rallied back up. I think I see a bit of a reversal area in here for price to be able to continue to trade south. If indeed, this little 15-minute level right here, but that's kind of what we're rolling off of right now. If you wanted to get in, but you don't necessarily want to jump in on a reversal, you could look for a breakdown below this area here. All right, crude oil. So crude oil yesterday had a pretty nice run up, but we were unable to get to any of our breakout levels that we had in here. Now, on the June contract, it actually moved right into our supply level before then selling off, but I haven't been analyzing the June contract. And the reason is that many brokers are not allowing you to open a new position. But look at where we hit on that front month June contract, that little wick over wick. We got a nice little move away from there. But I've been analyzing the September contract just simply to give ourselves a little bit of room, and that has rallied up pretty nicely. And so now, looking at this level, where do I see another opportunity to get in? Well, I'm still looking short overall. And I think that, there's this little wick over wick area in here, right there at the European market open, that I think could be a pretty clean area. And it actually was kind of a breakdown trade. Now, when I look at the 15-minute level, I'd be looking at this area right through here. So that would be, I think, the best area in here for an opportunity to get short, which puts me just above this little wick over wick right here, to this high point in price. All right, next, moving to gold. So gold yesterday, we had a breakdown potential. Unfortunately, that breakdown potential, we moved, and then it kind of stalled out. So if you took your stop and move it to break even, then you're still in the position. I would say that it's probably better to lock in some profits. I actually love, though, if you didn't get it, I love this wick over wick setup right here at the breakout point. So keep an eye on that one for today. I think that also could be a bit of a bull trap, because a lot of people are going to get long above all this noise here, and I think that'll trap in a lot of the bulls that are getting long, especially also above that 1,700 round number, and we could see a bit of a reversal. All right, let's move over and check our bonds and currency markets. So looking at our bonds and currency markets, yesterday we talked a lot in the live trade room about how the bond markets are essentially giving us some sideways price action that's not worth trying to pick tiny little areas in here for levels. Now, we did gap up yesterday after the market closed, a little bit of a gap up. So if we think that gap, the price is going to continue to run off of that level, you'd want to get long as it starts to get a little bit higher than this area. But I think it's, to me, this is very sideways in a 4-hour trend. And so while we're range bound, there's a lot less opportunities in there. In the Australian dollar, we did have a little bit of a demand area. This one, we came into the level 1, 2, 3, 4, 5, 6 candles later. We hadn't really gone anywhere. If you didn't catch it in the overnight, now we did have a lot of buying pressure here coming into it, and so if you got into that in the overnight, you may still not have been stopped out, because your stop has got to be below this region here. Could we still see a reversal out of that? Yeah, possibly, but I think it's probably better to trade to the downside in this case, and look for more basing for a breakdown below this area here. As that one told us to probably get out of that one a bit early. So the 6 candle rule, this is why we use it, right? To get us out of trades the wrong way. Now, here's the euro. Well, I was wrong on this one. We had a breakdown trade in here yesterday I was looking at, and it did hit the breakdown and immediately changed course. Now, this one gave us 1, 2, and on what would have been the third touch, popped right up out of that level, and so that one unfortunately was a real quick stop out, followed by price rallying up into what could be a supply area. That supply area that we identified is off the 4-hour zone in here, and we're getting very timid reaction from that level. So if you did take that one, you've got a first target right in here. So it's about maybe a 2-to-1 at best on the first target. But I think you've got a couple of different areas here that if price does pull back, that I think it's worth looking at getting long on that move. Canadian dollar. So in our Canadian dollar, so our euro shot straight up, our Canadian dollar shot straight down. We saw a total change in trend direction in that position. So I'm going to remove those levels, as we've seen that one came down really fast, really hard off of this level. Now this level up here still has a breakout potential and a breakout candidate, but now I need to look above to this area here as a potential supply zone for a possible reversal. So, when you trade with the trend, when you see trend direction, you're going to have days like yesterday where we got 6 candled out of a few trades, a few small stop outs, and not necessarily, the greatest trading day of my trading career. But we still have this. What this does is this sets us up for future trades going forward. Our Great British Pound level price did rally up on the pound as well, just barely missed that one for a long entry, and then blew right through the confirmation short, which means no entry to get into the trade. So there was no trade to be had on that particular level, and that was all on the ECB announcement. So still looking at a potential breakout above this region here. Now that I have 1-2 touches, I would need quality basing inside this level in order to make this thing work. And then certainly last but not least, Japanese yen. We actually did get a little rally off this Japanese yen level. It moved up about 2-1 before then kind of basing sideways. And then, so that one actually did wind up giving us a little bit of a profit. And then this one worked out extremely well yesterday, as we got a very nice move off of this one inside the Japanese yen. So both of our demand levels in the yen worked pretty well. I'm going to leave the lower level on. I'm just going to change it to a confirmation entry because that was just a touch and go on that level. So Japanese yen trade was very effective for us yesterday and got a very nice strong move away. So, I think that yesterday was a really good trading day for those of us that are trend followers that understand that you're going to have days where you get stopped out or 6 candled. I'll call it 6 candled out, which means you're out at basically break even plus or minus a few ticks, where you have those directional trading days where you can change your direction. And I think yesterday was one of those days. So I love days like that because it sets me up for future success. Now remember this, it's Friday. And anything you want to hold over the weekend, understand the risk you take in holding something over the weekend. For those of you that are still of the very strong bullish mindset, which we have yet to put in a lower swing high in our 4-hour trend, this could just be a day to pick some stocks up on a lower cost basis if you think that there's still things that you want to own and that we're going to drive this market higher. So which the market has not given me a lower swing low and a lower swing high as of yet, could be a good opportunity to do that. So if you have any questions, shoot us an email, support@tradersarmy.com. As always, stay safe, keep your trades well, and I will talk to you on Monday. See ya.